Hi there, welcome to this week's market analysis. So as usual, what we're going to do is I'll walk you through a quick summary of some of the events that happened last week, and we'll take a look into this upcoming week. What are some of the opportunities that you can focus on as well? Now first up, if you take a look at last week's event calendar, we do have some pretty interesting ones that were released. So first up over here, we have the US prelim GDP that came in at negative 0.6 versus the expected of negative 0.7, and for the US core PCE price index, it came in at 0.1 versus the 0.2 expected as well. Now this did not really create much of a volatility as of last week, but the key highlight was actually from Jackson Hole Symposium, where the chairman of the Federal Reserve actually mentioned that potentially they're gonna be hiking, but at the same time keeping a very close watch as to how that's gonna develop. Now the market kind of took it in terms of the equity side of it, the market actually took it as a pretty bearish quote-unquote perspective, and we did see on Friday, especially during the Jackson Hole Symposium, the equities market started to tank. Okay, and with that, the US dollar actually sees some strength to end off the week. So if you take a look at the charts over here, first up on the dollar index, you can see the volatility created on Friday just before the market closed. We have a little bit of a dip, coming in from the negative prelim GDP as well as the expectation of the core PC price index. The dollar actually weakened a bit, but from there on, we did a pretty strong reversal. So moving forward, going into the week, from this momentum over here, there's a very high possibility we'll continue to see that towards 109.30. However, I would say that right now wouldn't be the best area to be looking to buy in terms of the dollar index. We want to see how the market is going to react off at 109.30 before making a decision as to whether we want to continue looking for bull opportunity on the dollar index or to look for a potential reversal. Right, so if we can get a very strong impulsive break above 109 and the market is able to close above it, following that consolidation above that level, then we'll be holding on to a bullish sentiment and bullish directional bias. Alternatively, if we start to see the market stall and develop what we call a crawl pattern at the 109.3 area, we'll be more interested in the reversal on the dollar index. Right, so over here you probably need to give it maybe a good 2 to 3 days to see how the market develop around that zone. Now on the euro dollar though, we do have a potential short-term play for those of you who are perhaps a little bit more into intraday opportunity. Right, if you're looking at swing trade, this may not be the best, but if you're looking for intraday, I think there's a good chance that the euro dollar will continue falling towards 0.9850, and that will give you maybe about 100 pips of potential downside from where the market closed, and therefore, if you're looking for intraday, I think 100 pips is sufficient, is good opportunity. But if you're looking at swing, maybe that's not going to be very, very worthwhile, right? So in euro dollar, we have a very clear impulse correction pattern as of now, and this usually suggests that a continuation to the downside is of a higher probability. Okay, so do focus on that. But once the market tags somewhere around 0.9850, which is the 127.2 Fibonacci extension, you want to be a little bit cautious on looking for any sell, because we might get a reaction around that zone. Right, so euro dollar short-term opportunity to the downside. Pound dollar over here, which has a very close co-relationship with the euro. So we do see that the pound has actually fallen quite a bit. We are getting very, very close to the target at 127.2, which is at the price point of 1.1668 or 1.1670. We have perhaps about 50 to 60 pips of downside, and to me that's not something that I would even consider selling anymore. But perhaps what you want to keep an eye on is how the market is going to react when it comes down towards 1.1670. Okay, So I think mainly from the dollar index, the euro dollar and the pound dollar, if you're more conservative, my suggestion is to be patient for the week. Maybe give it, as I mentioned, 2 to 3 days on Wednesday or Thursday. Likelihood of price reaching that key level is very, very high in terms of possibility. So what you want to observe is how the market develop around there to get an idea, to get a clue as to moving forward. Will you want to look for a continuation to the current trend, or you want to potentially look for a reversal? Okay. Now on Aussie dollar, we have a very nice impulse, flat pattern, correction pattern. Of course, that again suggests more downside possibility. If you're looking to buy the dollar overall, okay, I think Aussie dollar among the euro and the pound would be one of the better opportunity to perhaps consider, simply because while we have a temporary support at 0.6870, if that level breaks, it opens up more downside opportunity as compared to the euro and the pound, right? And of course, if you understand a bit of intermarket correlation, we know that on Friday, the S&P index, in a while I'll go into that, we had a very, very strong bearish momentum on Friday. So with that, of course, understanding from a sentiment risk on, risk off, the Aussie would also weaken, right? So on Aussie dollar, what we can potentially catch is not only on the dollar strength, but also on the Aussie weakness from the risk off environment. Okay, and from a technical point of view, other than the impulse and the correction, we do also see this as a potential head and shoulder pattern that, if it breaks the neckline, that's where it kind of confirms the head and shoulder pattern, and that opens up to more downside. Okay, so Aussie dollar, I would say among the majors would be perhaps one of the clearest opportunity to look out for. If you do not have any potential sell trade at this moment that is running, do consider to look for a break perhaps around that 6870 area for a sell trade with a potential target at 6685, right? So that's on Aussie, pretty clear setup over there. Now on dollar Canadian, right now it's rather similar in terms of the perspective that we're talking about in relation to the dollar index, right? So you can see quite similar. We're kind of close to the key level, okay, at the top, right? So if you go back to dollar Canadian, we have this key level over here, which can potentially develop into a double top. So my suggestion, if you're looking at dollar Canadian, is to really keep a close watch around 1.3065. Okay, right now maintain a pretty neutral perspective, see how the market reacts around there. Again, you probably need to give it 2 to 3 days and see what the market is going to develop, right? If you get a crawl, a slow move, then look for a reversal back to the downside. If you get a break above, a consolidation above 1.3065, then look for the continuation to the upside, right? So on the bigger time frame perspective, dollar Canadian here, this level is key too, because if it holds, then we do have this as also a head and shoulder pattern, and then we can look for more downside from there, right? So having said that, that doesn't mean that it's 100% needs to drop, because this can just continue to the upside, retest this top before that reversal too. Okay, so that's why I say monitor how the market reacts around 1.3065. Now dollar yen, looking at what the pattern is developing here, there's a good chance we might break this, perhaps to go higher and retest again the top of the channel line. And one of the pattern that this can develop into is a kind of like a bigger diagonal that looks something like this. Okay, and that would then bring us to maybe somewhere around 139 to 139.40 before eventually taking the big sell off if that were to happen. So on dollar yen, I'm actually maintaining a rather neutral bias going into the week. Basically, I want to just give it a couple more days, see what's the pattern that's developed. Do we get a clear one? If not, we don't touch, don't trade for the week. If we have a clear pattern, I think right now I'm more interested in downside, right, other than the buy. So that's my view on the dollar yen. Okay, so a couple of oldest major pairs here are more or less holding on a neutral perspective and waiting for the next 2 to 3 days and see how the market develop. before we can establish a directional bias from them. Okay, gold. Right now, what I'm seeing here is there's a good possibility that we will get one more move first, perhaps towards 1710, before a potential bounce to the upside. So if you are short term looking for a sell trade opportunity, wait for consolidation here. Something like that will give you a decent sell trade towards 1710. If you're someone who's looking for swing trade, my suggestion is to just wait for it to drop lower first and look for the next buying opportunity. Okay, S&P, you can see very strong momentum to the downside, broke off this key level around 4110, and from here I'm holding on to a bearish perspective, at least for now. Okay, how far this can go, we can actually pull in a little bit of fib here to guide us in terms of where is the key zone to perhaps keep an eye on. We are getting very close to the 50% Fibonacci retracement from the swing low to the swing high. With the current momentum, I don't think we're going to see a strong rejection or stall around 50, perhaps the 618. Okay, so if you're looking at indices, it's not the ideal price point to be selling, definitely not the buy. Okay, so give it some time. If let's say the market were to slow down that drop and develop into a crawl pattern, maybe by Wednesday or Thursday next week, then there's a good chance this would bounce and retest back at the top of the channel. Okay, so that's on the S&P side of things, equities in general for the week. Now Bitcoin did a drop here as well because again, we are in a risk-off environment. When the equities market drop, traders and investors are more inclined to transfer their funds and money into safer asset, and crypto being a very speculative one, we do see that sell-off on Bitcoin too. Now looking at the chart here, I think there's a good chance that we'll see Bitcoin continue to hold on to a bearish perspective and retest the previous bottom at 18,860. So if you're into crypto, you're trading Bitcoin or Ethereum, this week's general directional bias would be to look for the sell. If Bitcoin is able to consolidate perhaps Monday and Tuesday, the possibility of the direction moving forward is still bearish. Okay? So you might want to then keep an eye on potential opportunities on the downside. Cool, so that's all for me for this week. I would say not much of a clear setup. To me, the clearest one, as I mentioned, is Aussie Dollar for now. So again, if there's not much of an opportunity, if the setup doesn't come to you for this week, my suggestion is to just remain patient, manage your risk, manage your downside, and again, look for better opportunities perhaps the following week. So all the best to your trading, manage your risks, and I'll see you guys next time. This video is partly sponsored by Zenfinix, bringing you the weekly market analysis. And of course, if today you would like to take your trading to the next level, or if today you're very new towards Forex trading, then we do have a collaboration together with Zenfinix where you can actually get the 4 Trading Pillars Masterclass for free, fully sponsored by Zenfinix. All you have to do is click on the link in the description and find out more how you can actually get access to this masterclass for free.